Most people view money as a finite resource tied to their time, a paycheck for hours worked. But for the financially literate, money is an employee. Today, we're going to show you how to build a monthly income machine that works for you, even when you aren't working. This is the comprehensive guide to the best monthly income strategies for beginners. Why monthly? Because life happens in 30-day cycles. Your rent, your mortgage, your groceries, and your streaming services don't wait for a quarterly dividend check. By building a portfolio that pays out monthly, you align your assets with your liabilities, creating a psychological and financial safety net that quarterly payers just can't match. Before we dive into the specific strategies, it's important to understand that income investing isn't new. For generations, the wealthiest families have prioritized cash flow over capital gains. They understood that a stock's price is just a number on a screen, but a dividend is cold, hard cash. In the mid-20th century, dividends accounted for a much larger portion of total market returns than they do today. By returning to this income-first mindset, you're adopting a strategy that has stood the test of time and market cycles. Our first cornerstone strategy is the Real Estate Investment Trust, or REIT. Think of it as owning property without the headaches of being a landlord. No broken toilets, no tenant disputes. These companies are legally required to pay out 90% of their taxable income to you, the shareholder. For beginners, this is the easiest entry point into high-quality real estate. Take Realty Income, ticker symbol O. They literally trademarked the phrase, the monthly dividend company. They own thousands of properties leased to investment-grade tenants. Because these companies pay rent monthly, Realty Income can pay you monthly. It's a battle-tested model that has survived multiple recessions while consistently raising its payout. But don't stop at retail. Industrial REITs, like STAG Industrial, benefit from the e-commerce boom. Every time someone clicks buy online, a warehouse somewhere is making money. Or look at LTC Properties, which focuses on senior housing, a sector poised for massive growth as the population ages. Diversifying your real estate holdings ensures that your monthly check is protected from sector-specific downturns. Strategy number 2 moves us into the world of exchange-traded funds, specifically yield-focused and covered call ETFs. In 2025, these have become the cheat code for monthly income. These funds hold a basket of stocks, but use sophisticated option strategies to squeeze out extra cash flow that traditional stocks simply can't offer. The J.P. Morgan Equity Premium Income ETF, or JEPI, is a prime example. It targets lower volatility than the S&P 500, but delivers a yield that often doubles or triples the market average. It achieves this by selling call options. You're essentially trading some of the moonshot potential of the market for a steady, reliable monthly payout. For a beginner, this trade-off is often worth it for the peace of mind. As your portfolio grows, taxes become your biggest expense. That's why funds like SPYI or QQQI are game changers. They use specific types of options contracts that are taxed at a lower rate. This means more of that monthly income stays in your brokerage account and less goes to the government. When you're starting out, every dollar reinvested counts toward your compounding journey. Context is everything. Economic landscape is shifting. After years of high interest rates, the Federal Reserve is gradually easing. This is a massive tailwind for income investors. When interest rates drop, the yields on traditional savings accounts and CDs fall too. This makes dividend-paying assets like REITs and income ETFs more attractive to the broader market, which can lead to capital appreciation on top of your monthly checks. You are entering the market at a pivotal moment. Sometimes the best income strategy is the simplest one. Cash ETFs, or high-interest savings account ETFs, allow you to earn a monthly return on your uninvested cash. They are highly liquid and extremely low risk. In a volatile market, having a portion of your portfolio in a cash ETF ensures that you're still collecting a check even when stocks are red. It's the sleep well at night part of your strategy. Strategy number 3 is for the builders. Digital side hustles. Unlike a second job where you trade hours for dollars, digital products allow you to create an asset once and sell it forever. This is active work that converts into passive monthly income. The demand for high-quality digital templates, planners, and niche courses is at an all-time high. Imagine spending a weekend creating a budget template. You list it on Etsy, and for the next 3 years, you receive notifications of sales every single month. There is no inventory to manage and no shipping costs. Your profit margin is nearly 100%. When you combine this active income with your dividend investments, you accelerate your path to financial freedom exponentially. So how do you put it all together? We recommend the 40-40-20 rule for beginners. 40% in stable, monthly paying REITs for real-world asset backing, 40% in high-yield ETFs for market-driven income, and 20% in cash ETFs or your own side hustle for flexibility and growth. This balanced approach protects you from market crashes while keeping the income flowing. The biggest mistake beginners make is trying to time the market. Don't wait for the perfect price. Use dollar-cost averaging. Set up an automatic transfer every month. Whether the market is up or down, you buy your income-producing assets. Over time, you'll find that you're buying more shares when they are cheap and fewer when they are expensive, naturally lowering your average cost. In the beginning, your monthly checks might only buy you a cup of coffee. But if you use a dividend reinvestment plan, or DRIP, those checks buy more shares. Those new shares then pay their own dividends next month. This is the snowball effect. Within a few years, your portfolio starts to grow itself, turning small monthly gains into a life-changing income stream. To start, you need the right tools. Look for a brokerage that offers fractional shares and zero commission trades. This allows you to diversify even with a small amount of money. Whether you're using a traditional brokerage or a modern app, ensure they support automatic dividend reinvestment. Your focus should be on building the habit, not just the balance. Let's talk about your first major milestone, reaching $100 a month in passive income. For many beginners, this feels like a distant dream, but it's the most important psychological hurdle. $100 covers your phone bill, your internet, or a nice dinner out. Once you reach this point, the game changes. You've proven that the system works. From there, it's just a matter of scaling. Reaching your first 100 is the hardest. The journey from 100 to 1,000 is often faster thanks to the power of compounding. Income investing requires a different mindset. While most investors panic when their portfolio value drops, income investors stay calm. Why? Because as long as the dividends are being paid, the daily price of the stock doesn't matter. You are a business owner collecting your share of the profits. This psychological shift is what allows you to stay invested when everyone else is selling. Watch out for yield traps. A stock paying a 20% dividend might seem attractive, but if the company is failing, that payout won't last. Always check the payout ratio and the company's debt levels. High income is great, but sustainable income is better. Beginners should prioritize quality and track record over the highest possible number. Slow and steady wins the income race. Building a monthly income stream isn't a get-rich-quick scheme. It's a get-rich-forever strategy. Start small, stay consistent, and keep your eyes on the goal: financial autonomy. Imagine a life where your time is yours because your money is working. That future starts with your first investment today. Thank you for watching, and here's to your financial success.